Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to do a dose of reality today because what the hell, people? I've been on Twitter and I've been on, well, really just Twitter today, and I'm looking at Twitter on my other monitor here, and I don't get it, guys. I'm gonna go through everything in this video. I just couldn't believe my eyes. I wasn't even planning on doing a video today, and I'm looking at Twitter. I'm seeing all these people talking about, going long term. It's time to invest in all this stuff. So let's talk about what's happening. Let's talk about the market. Let's talk about maybe some opportunities to actually go long and some opportunities to go short. So before I jump into the content, please do me a huge favor. Go ahead and hit that thumbs up button on this video. And also don't forget to subscribe to the channel if you haven't already. So right now I have a very empty looking chart on the screen. Of course, this is Bitcoin, and this is the monthly chart. What do we see on the monthly chart? We see 3 red candles in a row. Of course, the month is not over, so who knows? Maybe in the next 24 to 48 hours, Bitcoin decides to go absolutely ape shit and close above $9,500 and turn this into a green candle. It is possible, right? It is possible for sure. But if we just look at this, and let's say that you weren't invested in this asset, you didn't want to invest in this asset, you were just using it strictly as a textbook example of whether you were in an uptrend or a downtrend and all that kind of stuff. You don't really have to know a lot about technical analysis to be able to spot this thing and say this is not a bullish momentum that you're looking at. Okay, now lack of bullish momentum does not guarantee that it won't ever go up or that it won't go up right away, but typically you're going to be a little safer if you trade with the momentum versus trying to trade against it, which is really just a fancy way of saying, the trend is your friend. Well, let's go back and look at, well, this is Coinbase, so this goes back to 2015. So we'll just go back to 2015. This was the bear market, right? This was basically the bear market stopped here and then had this consolidation or this accumulation period, right? And so you had 3 red bars. But once the bull run kicked off, you never once saw 3 red monthly candles in a row. Never. Look at this. Once it kicked off, once it came down and retested that bottom here in August of 2015, corrections lasted no longer than 2 red candles. Okay? Never more than 2. The first time we had 3 red candles in a row was right here after this descending triangle broke. What just happened? Our descending triangle broke. Okay, now we're getting ready to punch in our 3rd red candle in a row. So if you're looking at this and you're like a lot of these people on Twitter going, oh boy, it's time to go long, I don't know why, right? I'm not here to tell you what to do. I'm not here to tell you how to trade. But the only thing that I would tell anybody that wants to trade is make sure you have a reason for your trade. Preferably multiple reasons, right? One of the people that I learned to trade from a few years ago, he had a rule of thumb. If you don't have 3 reasons for a trade, you shouldn't take the trade. So the only reason that I could see going long is from an investment point of view, meaning you're just going to stick money in there and you don't care if it goes down, is because, number one, you honestly don't care that it goes down and that you're okay being underwater for a period of time, maybe forever, aka it's money you can afford to lose. Or number 2, you are feeling FOMO and you're worried you're going to miss the boat. Other than those 2 things, there's really nothing on this chart that says, hey, we should be putting our money into this market right now. If we draw our Fibonacci levels, we'll just draw them from top to bottom here. We're sitting between the 50 and the 61.8 fib. So, if we were sitting down at the 61.8 fib, I could actually get behind some people saying, hey, I want to go long here. Not because I don't think it'll go lower than that, but just because, as everybody knows that watches this channel, I follow the golden ratio with my long-term investments, which means that right through here is indeed my reload zone, right? It starts out down around 5,400 or so, and it stops around 7,200. And typically what I'm looking for is I want to see some type of reversal pattern. Now this is a monthly chart, but I want to see a W, right? Not necessarily on a monthly. A daily W is fine, right? If we come down, price comes down in this zone and starts putting in a W, yeah, I would probably look to go long on an investment, not a trade, but an investment that I plan on holding for a few years, okay? But we're not doing that. We don't have any type of reversal. All this looks like really is, a giant downtrend. And what I'm waiting for is, I talked about this in the last video, hopefully you saw that. What I'm really waiting for is a chance to go short. And I've been day trading. Day trading, I do that every day. I have to. That's how I pay my bills. But as far as like swing trading, I'm still being patient and waiting, because I really believe that there's a good opportunity here for us to come back up and test this line. That RSI should, in theory, come up and retest this RSI line from the bottom side. It should be support flipped resistance, and then that should, in theory, fail and make a new low. And if it does that, of course, then price should go up. And I'd really like to see it get up to around 9,500 or so. Right around 9,500 would be awesome, right? Retest the bottom of this this close right here around 9,500 bucks, and then a dump from there down to around at least 7,200. I'd really like to see it dump a little further than that, right? So ideally, that's what I'm doing, is I'm waiting to open a short. Now, some people would say, James, couldn't I just go long here? You could. You actually could go long here, right? If you were wanting to go long on a trade, and you were ballsy and you wanted to fight the trend, typically you don't want to do that. But if you're ballsy, some people will go long there and look to close it up here. If it, again, if it gets that high, and then they'll turn around and flip short, right? They'll play both sides of it. Me, I'm totally fine fighting the trend on a day trade, right? Getting in and out for a scalp. I'm not so okay fighting the trend on a swing trade, right? There's too much opportunity there for something to go wrong. I might open that thing up on a long, go to bed, and then wake up and find out that it dumped another 500 bucks. I wouldn't do that. Okay, but I could see people doing it, more aggressive traders, people with a little bit more of a risk appetite, if you will. So I do think we're going to pump, right? I definitely think we're due for a pump, some type of relief bounce. If we look at this thing again, in theory, we should come up and retest that RSI line there. And also, we're very, very oversold, right? This is a daily chart. We're sitting down here around 22 RSI. So, a relief bounce is definitely in the cards, right? Again, doesn't guarantee anything, but certainly in the cards. That being said, on the longer term picture, guys, nothing has changed, right? It just hasn't. This whole period here was about a 3-month period, right? From November all the way up through, well, I guess more like 4 or 5 months. April, this was our accumulation. And then we had, 2 months of, almost 3 months of markup. And then we had almost 3 months of, sideways movement, which was our distribution. So yeah, it's probably going to take a couple of months to get back down to these levels I keep talking about, down around $4,000 or $5,000, possibly even lower, right? I'd really like to see this thing come down to 3,500 and fill in this tiny little gap down here. That'd be awesome. So, it's not going to happen overnight. And if you are a trader, you obviously just can't sit out forever and say, I'm not going to trade for 3 months. You do got to take some trades if that's how you're paying your bills. But just make sure you're not chasing anything. Make sure you're not, getting into a trade simply because you feel like you're going to miss out, right? There's always another trade. That's the bottom line. There's always another trade. And the other thing is if you are a bull and you're just constantly looking for reasons to go long, turn that damn bias off, right? Turn that thing off. You've got to look for places to go short in a bear market, right? You can't just go long all the time. You got to be able to play both sides of this market. Otherwise, you're going to get crushed, right? And that's just some brutal reality. I know people don't like to hear that, but you're going to lose. If you don't play both sides of the market, you will lose, period. So definitely, look at this thing with an objective point of view, and don't only be looking to go long, because on a weekly chart, it looks like absolute, doo-doo. And on a monthly chart, it looks even worse, right? On a monthly chart, all upward momentum is now lost, right? This thing is very likely to come all the way back down here and then do something, obviously not in a straight line, but do something like this, right? And then go higher. Now, also don't forget that it is very, very possible that this actually does go all the way down here, right? Fill in these old gaps and then start to move up. The one thing that I will say is I feel very confident that by May of next year, the price should be stabilized, right? I don't think we're going to make any new highs before then. I don't think we're going to go up above 20,000 before then. I really don't think we're going to go back up above 10,000 before then. I just don't. I could be wrong, obviously, but I don't believe so. So the other thing to keep in mind, though, is if you are a bear, you got to be careful being a bear here too, because if you look at this, wick-off events happen on different time frames, And it's very possible that this was, a markdown on a smaller time frame, than that this is actually mini accumulation, right? And if this is mini accumulation, then your next step is going to be a markup phase. Now, again, I expect that. I'm wanting that. I think, I want to get it up to about 9,500 here so I can go short, get some consolidation sideways, get some mini distribution, and then, head on down. All right, guys, so I was editing the video and I realized I forgot to mention something. So this is super important. So, I'm sitting here and I'm talking about being a bear, and I'm talking about me expecting this pump up to, 9,000, 9,500. There's actually another reason that I expect that I didn't talk about that I meant to cover. So listen, here's the deal. We were talking about how in this monthly candle, there hasn't been 3 red monthly candles in a bull market. When we went back to 2015, that never happened. Well, something else that hasn't happened since 2016, Bitcoin has never printed more than 3 red candles in a row. Okay, not even in the bear market. Look at this. If you go back to 2016, it had this period right here in like August of 2016, but then it stopped. Right, there was no more of that. Right here, there was 3 red candles and then green. Here there was 2 green, 2 green. Right, 3 red candles, green. 1 red candle, right? Even in the bear market, it was 2 red, then 1 green, 2 red, 1 green, 2 red, 1 green, 1 red. You can see this, obviously, your colors. But every time I got to 3 red candles, then the following week, there was some type of relief rally. So when we look at this, we just put in our 3rd weekly red candle. So I definitely expect this week to print a green candle. Doesn't change my bearish outlook overall on the macro level. Doesn't change the fact that I still think we're going down to $3,500 to $4,200. Okay, none of that changes. I just expect us to have some type of rally during this week, and then for this candle to be a green candle when it closes. And what I expect to happen, I expect this to pump up to either 9,000, somewhere between 9,000 and 9,500, and then I expect it to fall back down and probably put in some type of candle that looks something like this, but green, right? So it'll have a small body with a tall wick that wicked up into these areas, and then it'll get shoved right back down. So that's what I'm expecting. And now I'm going to splice this little 2-minute clip into the other video. So if it's a little awkward or doesn't seem like it fits just perfectly, that's the reason why. With all that being said, please remember I am literally some guy sitting in a spare bedroom, not a professional financial advisor. Nothing in this video is financial advice or trading advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel if you haven't already. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can see details on how to join my paid program where I teach people how to trade. It's not a calls program. It's not, hey, copy what I'm doing. It's simply me teaching you what you need to know to be a trader. All right, this is James with Crypto Common Sense. Trade safe.